Hey everyone, Logan Hertz here with Hazeltine LLC. I wanted to talk about a rather serious topic. I have to admit it, I am actually evil. Whole life insurance agents like myself are clearly just scam artists. We are evil. Infinite banking is also nothing more than a scam. Um, and there are many different pieces of evidence for this. I want to show you sort of the inside of this evil scheme. And the first and most important element of this is that when you buy a whole life insurance policy, that life insurance agent makes a commission. And that was a life insurance agent in action. He made a commission. That makes him evil. And when you really boil it down to all of the criticisms of infinite banking and whole life insurance, this really is what it boils down to. When you really sift through and say, okay, where's the real argument here? Like, what is the real objection to infinite banking and whole life insurance, which of course they always confuse those two? It really boils down to the life insurance agent made a commission, therefore he is evil. That really is what it boils down to. Which roughly translates to, from the critic side, I'm an envious loser and I cannot stand the fact that somebody else might make money. And so I want to tear them down. And I also have this Marxist idea that wealth is a zero sum game. So if a life insurance agent makes a commission, he must have stolen it from his customer. It couldn't be that he like actually added value to the customer and therefore, earned his keep. No, he actually stole it because, of course, wealth is a zero sum game. And it's kind of like James Neathery says, it's kind of interesting that describing a cash flow somehow makes it evil, right? So there are lots of different ways that you could make income. You could collect rental income. You could collect a salary, right? You could have profit sharing. You could get a bonus, right? You could get business revenue, business income. Any number of these things are fine, but when we call it a commission, all of a sudden now it becomes evil, right? Now it becomes evil, right? Um, but they pretty much all work the same way, right? You're adding value and then you collect income based on the value you provide. Call it whatever you want, salary, commission, dividend, whatever, right? It's all the same. So, when I go to my local farmer's market, and I buy some produce from the farmer and he makes money off of me, I could call that a commission. It works the same way, right? Some of the money I'm paying to him goes to cover his costs, and some of that money goes into his pocket in the form of a commission, right? But somehow, call me naive, but somehow when I buy from the farm, I don't feel like I've been exploited, right? To bring it even closer to home, when I go to my property and casualty insurance agent and I buy homeowners insurance, I buy car insurance, I buy liability insurance, right? I know he's making a commission, right? Yet somehow I don't feel like I've been exploited. In fact, I'm so naive and I'm such a sucker and I'm so easily taken advantage of that I actually believe my insurance agent has performed a service. He has provided a service to me. He has helped me. And I want him to make as much money as possible because I have this ridiculous idea that wealth is not a zero sum game, right? And the laborer is worthy of his hire. And when you add value to someone, you then make money, which, by the way, is not easy. A lot of these people criticizing life insurance, I think they seem to think that money just grows on trees. I will admit I kind of have to envy many of our critics because it seems to me that they don't have to work for their money. It seems to me that they believe money just grows on trees and they can just sit back and take advantage and collect money and never have to work for it. Because my question is always, so after you're done telling the evil life insurance agent, you can't do this, you can't do that, stop doing that. How's he supposed to feed his family? I guess the conclusion is that you think life insurance agents should starve because they're evil. And if evil people starve, that's okay, right? If we beat up, the evil life insurance agent, that's fine. So if you collect your income under any capacity whatsoever, as long as you don't call it a commission, then it's perfectly fine. But when you call it a commission, That makes it evil, right? So us evil life insurance agent and the scam of infinite banking. Really, when you get through all of kind of the misconceptions around what whole life insurance is, how it works, what infinite banking is, how it works, and really try to get to the bottom of what are our critics saying? What is their fundamental objection? It really boils down to one thing. Really, I'm not joking. It's evil because the life insurance agent made a commission. That's really what it boils down to. Okay, but there are other ways in which clearly I'm evil. I'm just a scam artist. I'm running this enormous racket here. And this is that when you die, let's say you have a whole life insurance policy and you die, the life insurance company keeps your cash value. I mean, this is just this is just diabolical, right? Because if you the death benefit is always going to be more than the cash value, right? And it's pretty clearly laid out, death benefit. Where does it say death benefit plus cash value? No, it just says death benefit, right? Um, but that evil life insurance company, you may have $500,000 of cash value and a $2 million death benefit, but they give you $2 million and not the $500,000. That's just nefarious. It's absolutely nefarious. I mean, I can't believe people sign up for this, right? Um, I don't know where people get the idea that death benefit and cash value are additive because that's nowhere in the contract. I mean, I don't know where this idea comes from, but at the very least, the evil life insurance company is at least being upfront about their total nefariousness, which is that the death benefit is the death benefit. That's what you get, period. Right. Now, the death benefit, of course, grows over time as you pay premiums into a dividend paying policy. You receive dividends, which grows the death benefit and the cash value. Right. But of course, the way this works is that cash value is the net present value of that future death benefit. So when people say the life insurance company keeps your cash value, that's actually not correct. Cash value is part of the death benefit. It is the net present value of the death benefit. So when that death benefit is paid out, it by definition includes the cash value. So it's actually technically false to say the insurance company keeps the cash value. They do not keep the cash value. They pay the death benefit, which includes the cash value, right? So the death benefit is the total value of your house. The cash value is your current equity in the house, right? The death benefit is the total value of your policy. And then the cash value is how much of that death benefit is liquid and accessible to you. But they're not additive. They're not two different things, right? So but that's another way in which clearly, infinite banking is a scam, whole life insurance is evil. I mean, this is just it's absolutely, absolutely diabolical. Another way in which infinite banking is a scam, because of course, infinite banking and whole life insurance to these people are completely indistinguishable, right? It's like confusing home ownership with real estate investing. The underlying asset might be the same real estate, but obviously the way you're using it is very, very different. And of course, not all real estate is created equal, right? Likewise, whole life insurance, it's not all created equal. You can design it all kinds of different ways. There are all kinds of different policies. So making a blanket statement about whole life insurance is like making a blanket statement about real estate. That's ridiculous. You can't really generalize about real estate. What kind of real estate are you talking about? And more importantly, why are you buying the real estate and how are you using it? Are you buying it as a place to live in? Or are you buying it as an investment? And if you're buying it as an investment, what kind of an investment is it? Right? There could be all kinds of different things, right? So likewise, infinite banking and whole life insurance, two different things. Whole life insurance is the underlying asset, which again can be designed a number of different ways. Infinite banking is a process of becoming your own banker, which uses or can use whole life insurance, right? Um, but again, another way in which this is a total scam is that whole life insurance is a horrible investment because the rate of return in whole life insurance is just terrible. It's just terrible. It might be, 3 to 5%, maybe more, maybe up to 6%, but it's just a horrible rate of return. It's just horrible. So once again, that was a life insurance agent in action after he has conned his unsuspecting prospect into buying whole life insurance. which is horrible, right? Of course, he's taken advantage of them because the rate of return in whole life insurance is terrible. Whole life insurance is a terrible investment. I admit it. I admit it. Whoever said whole life insurance was an investment? I'm confused. It's whole life insurance. It's not an investment vehicle. Okay. Whole life insurance is not an investment, and rate of return is not really a relevant metric, right? I don't know of any life insurance agent that I'm aware of, even the bad ones, that say you should buy whole life insurance because you'll get a great rate of return, right? Not aware of anyone who says that, um, other than our critics, who of course, you know, correctly point out how evil we are and what a scam this is. The rate of return in whole life insurance tends to be competitive with or beat a savings account, right? So that's, you can think of whole life insurance like a savings account. It's a lot more than that, right? So when you consider the rate of return in whole life insurance, there was a study by a MassMutual that looked at the rate of return over a 36-year period from 1990 to 2016. And these were with policies that I would probably design differently. But even with those, just sort of generically designed policies, you got a rate of return above 6%, 6.13% rate of return. When you consider that that's a 6.13% rate of return, totally net, no taxes, net of taxes, net of fees, you haven't taken on any market risk, you had no down years. That's actually pretty impressive when you think about it, right? If you just throw in taxes and fees, you'd probably have to get a 10% rate of return in the market to net out a 6% actual rate of return at the end of the day. Okay. And then, of course, that's not even including the other benefits you're getting. Most importantly, that permanent death benefit protection, which will also protect you against long term care. Um, and the legacy, which will pay out, the fact that you have the policy loan feature, meaning you can use the money in your policy, you can use that cash value without interrupting the growth in the policy. So when we say rate of return of what, right? They're typically myopically focused on just the cash value. How does the cash value grow? What's my rate of return on the cash value? Well, that's like looking at real estate and just looking at what is the total value of the property and how does that trend over time. So you could look at a piece of real estate and maybe the value of that real estate just goes up 3 to 5% per year, right? But it would be ridiculous to conclude that then that's a bad investment because you're ignoring so much of what makes real estate a great investment. You're just looking at capital appreciation and that's it. And there's so many other things that real estate gives you, right? The ability to leverage that property. You can borrow against it, right? The rental income you're getting. How about the tax benefits, right? So many other benefits, right? So likewise, when you look at just the rate of return of your cash value in the policy, you're just looking at one component of whole life insurance. And there was another study done, which has not been made public, where they looked at it and said, okay, let's look at life insurance and compare it to an investment. Not the right comparison, but let's do that. And let's not just look at, well, what's the rate of return on cash value versus what's the rate of return in the investment. Of course, the investment, at least hypothetically, can do a lot better. Okay. But let's ask a different question. What rate of return would I need to get in the market to equal all the benefits I'm getting in whole life insurance, right? Which is not just the cash value, it's everything else. The answer they came up with was 17%. So if you wanted to get the same benefits you're getting in whole life insurance by putting your money in the market, you would have to get a 17% rate of return to equal the benefits in whole life insurance, right? Because again, the cash value growth is only one of the benefits you get in whole life insurance. Let me also point out whole life insurance is one integral whole. It's a very simple product, which is good, right? With engineering, with financial products, with everything, the simpler the design, the better. The more complicated it is, the more breaking points there are. You don't want that. You want something that's simple. So the fact that whole life insurance is a simple product, one integral whole, is very important. Really, what you're buying is a permanent death benefit. That's it. It's very simple, a permanent death benefit. And from that permanent death benefit flows a whole host of benefits. Just like when you buy real estate, what you're buying is a piece of real estate. It's one integral whole. Okay. But from that, you can derive a host of benefits, right? Like the analogy of the sun. The sun is one thing, but there are many different benefits we get from the sun: light, heat, arable land, right? Stuff like that. Okay. So, but it's important to understand whole life insurance is very simple, and simple is good. The simpler the product, the better. That's why whole life insurance has been so bedrock for 200 years. So when we talk about these different benefits like cash value, like long-term care protection, like the policy loan feature, like the death benefit itself, like the tax benefits, they're not different components. Okay. They all come from that one simple component, which is a permanent death benefit. Okay. And we can talk about how each of those components work, but they all derive from one simple thing: a guaranteed future payout, which is that permanent death benefit. So simplicity is good, right? Oftentimes the Wall Street types will try to confuse you and obfuscate with all these very complex models, which are really just sales and marketing in disguise. But complicated doesn't mean good. Simple means good. Any good business owner knows this. When you look at the most successful businesses out there, they have very simple business models, right? Think about Uber. That's a very simple business model. It's very revolutionary because it's so simple. Ride sharing, right? I can sum it up in two words: ride sharing. That's it, right? And you could talk about all the different benefits that Uber has realized and all the different benefits that customers get from that. But ultimately, the idea, the concept is very simple. So simple is good, right? But again, clearly we're just evil, and this is just a scam. Okay. How else is this evil? How else is this a scam? Well, the dividend, that dividend that you get paid in whole life, that dividend is just a refund of excess premium. They're, you idiot, they're just giving you back your own money. They overcharged you for the life insurance, and then they're just giving you back some of your money and calling it a dividend, right? What a moron. You think the dividend is some good thing? They're just giving you back your own money, you moron. So again, if the dividend is really a refund of excess premium in the sense that they mean it, what they're telling you is you pay $100 in your whole life policy, then the insurance company gives you back 50 at the end of the year, and that's the dividend. Well, that's actually not the way it works. What you see is if you look at a whole life insurance policy, you're getting way more out of the policy than what you put into it, right? As you get into the later years of the policy, like in year 30, you're probably being paid a dividend that's more than 3 times the amount you're paying in premium in the policy. So you're paying a $10,000 premium and you're getting a $30,000 dividend in that same year. So if the dividend is really just a refund of excess premium, how are we getting way more out of the contract than what we put into it, right? Which we are, okay? And the answer is because, okay, the IRS is where this comes from. And the IRS is not the expert on finances or life insurance or anything. The IRS is a government bureaucracy. Their only expertise is, what does the IRS code say? They're the experts on that, nothing else, okay? They treat the dividend as a refund of excess premium, which keeps it tax-free, which is phenomenal. I don't know why anyone would complain about their gains not being taxed where normally they would. But because it's inside of a life insurance contract, your dividend is not taxed, which is a good thing. So as my friend DeAndre Clayton says, it is treated as doesn't mean that's what it is. So the IRS, for tax purposes, treats your dividend as a refund of excess premium, which means it's tax-free, which is phenomenal. But if it really were just, oh, you paid in $100 and we're now giving you back 50, then you couldn't get more in cash value, accumulate more in cash value in the policy than what you paid in. It wouldn't be possible, but it is possible, and it happens. In fact, it happens on a guaranteed basis. Life insurance is an aleatory contract, which means you always get more out of it than what you put into it. When you think about that, that's really powerful. How many financial instruments do you know of where you are guaranteed that you will always get more out of it than what you put into it? Wall Street has conditioned us to believe that we always have to take on the risk of loss, right? Once you put your money in their vehicles, you don't know what you're going to get out of it. It could be substantially less. In fact, it probably will, your positions probably will be down at some point, okay? Not so with whole life insurance. So really what's going on is the life insurance companies are well-run companies, which means they are very conservative. So when they project out for the year, Okay. They make the most conservative assumptions possible. They assume the worst possible mortality experience. They assume the highest possible expenses. Okay. Then invariably, when they get to the end of the year, of course, they find out they did better than projected because they deliberately were conservative. And so now they take that excess that they didn't project and they distribute it to policyholders in the form of a dividend. Okay. That's what's going on. The dividends come from the profits of the company, just like any other dividend. What makes this dividend special is because it's in life insurance, it's tax free. And by the way, you could simply receive the dividend as a check in the mail if you wanted to. Okay. The reason why we don't recommend that is because now it does become taxable, right? Now it's just like any other dividend. You're receiving income, a share of the profits by way of the dividend, and now it's taxed just like any other dividend. So that's not what we do. What we do is we keep the dividends inside of the policy and grow the cash value. What we're actually doing technically is we're purchasing what are called paid up additions. I don't want to get too technical, but basically what we're doing is we're reinvesting in quotes. That's not exactly what's going on, but you can think of it that way. We're reinvesting the dividends in the policy so that we grow our cash value exponentially. Meanwhile, it stays tax free. If we collected the dividend as a check in the mail, it would just be a straight up income stream. There'd be no compounding like in the policy, and we'd have to pay taxes on that dividend. Okay. So a dividend is tax free. Okay. But certainly you're going to have gains. It's not just a refund of excess premium because you're going to get way more out of the policy than what you put into it. If it were really just a refund of excess premium, that wouldn't be possible. Okay. So now here we go again. These infinite banking guys, they're such scam artists. I mean, they're so terrible. They're saying you borrow from yourself. I mean, how terrible is that, right? You're borrowing from yourself. You're borrowing your own money. Where's the benefit in that? I mean, this is clearly just a scam. These guys are playing all sorts of games. You moron, you're just borrowing your own money. Yep, that's exactly how I act after I've sold one of these naive little morons on infinite banking. Right. Okay, so let's be clear. What we're talking about with the infinite banking concept. Some people talk about borrowing from yourself. Okay. They're not talking about that in a literal sense. They mean that in a conceptual sense. What's actually going on is this. You are paying premiums into a whole life insurance policy. Those premiums grow cash value, okay, an exponentially increasing pile of capital. When you want to utilize that capital, you're not going to withdraw it. You can do that. It's called a surrender. And if you did that, then it would be just like any other savings account, right? It's earning, and then when you use it, you withdraw the money, and that money you withdraw is no longer earning for you. Okay. But with infinite banking, what we can do is we can use the money in our policy without interrupting the compound interest we're earning. Okay. So if we have $100,000 in cash value in our whole life insurance policy, and we take out a $50,000 policy loan, okay, so we now got $50,000 out of the policy, the full $100,000 principal balance keeps earning for us. Okay. So what's actually going on? Again, I don't know if people are deliberately misinterpreting what the infinite banking types are saying, but when they say borrow from yourself, they're speaking in a conceptual sense. That's not literally what's going on. Okay. What's actually going on is you're not borrowing your own money. You're borrowing the insurance company's money. Okay. It's analogous to when you borrow against your house. Okay. What we're doing is we're taking the whole life insurance policy cash value and we're collateralizing it. So we take the $100,000 of cash value that serves as collateral. Now we borrow $50,000 from the insurance company, not from our policy. No money left our policy. Our money is still safely earning for us. So now we have $50,000 that we can go and spend or invest or whatever. Meanwhile, the full $100,000 principal balance keeps earning for us, totally uninterrupted. We're earning interest and dividends on the full $100,000 principal balance. On this $50,000 policy loan, there are no repayment terms whatsoever. Pay it back if, when, and how you please. It's a contractually guaranteed right. There's no credit check. There's no debt. There's no nothing. Okay. You just got $50,000. Why does the insurance company give this to you on a contractually guaranteed basis? Well, because it's required by law, but also because remember, on this policy, there's a death benefit, right? So if you have $100,000 in cash value, you might have $1 million death benefit. Okay. So if you take out that $50,000 and you never pay it back, all that happens is the death benefit on the policy pays off that loan when you die. Okay. So by strategically taking out policy loans and strategically paying them back, we ensure that all that money that would have left our personal economy had we spent it now stays permanently captured inside our personal economy, earning for us uninterrupted compound interest from now until the day we die. So we're not borrowing from ourselves. We're borrowing against our policy. We're actually borrowing from the insurance company, right? Again, it's analogous to what real estate investors will do when they borrow against their properties, right? That way they keep collecting rental income from the property, they keep benefiting from the capital appreciation of the property, and they pay no taxes. That's another important thing. When you take out a policy loan, you're not paying taxes. Okay. If you realized a gain, by surrendering cash in the policy, you could pay taxes, okay, but we don't want to do that. So we imitate real estate investors, right? So clearly it's just a scam, as you can see. There's no benefit to this whatsoever, other than evil life insurance agents like me collecting a commission. That's the only reason any of this exists, right? Never mind bank-owned life insurance and why banks own a ton of it. Never mind corporate-owned life insurance and why corporations own a ton of it. Never mind what would the Rockefellers do and why rich people own tons of whole life insurance. The only reason to buy a whole life insurance policy is because that scummy scam artist of a life insurance agent is going to make a commission. That's the only purpose of whole life insurance, is to make sure that greedy, evil little Shylocks like me can keep collecting commissions on the backs of our hapless, naive little customers, right? I mean, when I hear this, I'm just recalling my training as a life insurance agent. All right. Why else is this evil? Like, again, you don't pay taxes on borrowed money, right? Well, of course you don't pay taxes on borrowed money. Just go rack up debt on a credit card, you idiot, right? Well, we talked about a little bit already about why a policy loan is not a debt, right? Policy loan is not a debt. There's actually even a Supreme Court case that has ruled that. So when you take out a policy loan, first of all, there's no credit check. It's not like you have to qualify for it. Okay. You've already built up the collateral in your cash value. So there's no credit check, there's no qualification process. As long as you have the cash value, you have the contractually guaranteed right to borrow against it, right? Via the policy loan feature. And when you take out a policy loan, there are no repayment terms. It's not a debt, and you incur no liability whatsoever. You pay it back if, when, and how you please. Okay. And what, of course, we end up doing is we pay it back strategically in a method that makes sense for us. And that, again, depends on the customer, right? That depends on the customer. How, when, or even if you're going to pay that policy loan back depends on you, right? So clearly, I'm just a scam artist. And of course, when I say, hey, does anyone want to buy whole life insurance? Of course, everybody lines up to just give me their money. It's amazing. I mean, it's such an easy racket, right? I mean, I'm just sitting back here collecting the checks. I kind of relax and, rub my gold coins together like Scrooge. That's what I do. I'm a whole life insurance agent. It's easy money. I never have to actually like convince people. I never get called names. Nobody ever says no. I never have to like hunt for business or take on any risk, you know. Um, and if someone does dare to say no and I say, hey, you want to buy some whole life insurance and do this infinite banking thing, man, it's like cool. And they say, oh, no, I know, I'm not falling for that scam. And then I say, your feeble skills are no match for the power of the dark side. You will pay the price for your lack of vision. Nice. Hit him with the force lightning, right? It's part of the life insurance agent trading, right? When someone won't buy whole life insurance, you hit them with a force lightning, you force choke them, right? Every day I start with the oath of loyalty to Voldemort, right? Then I practice the dark arts, I practice the dark side of the force, right? And then after I successfully sell my clients, my victims on whole life insurance, I say, hail the Dark Lord Sauron, right? So, I just wanted to sort of lay out this whole evil scam from an insider so that you know that whole life insurance is evil, infinite banking is a scam, and whole life insurance agents like myself are just out there to enrich ourselves at the expense of the poor people that we exploit, namely our customers. And of course, all the people who criticize whole life insurance and who criticize the infinite banking concept are wonderful angels. They are only have your best interests at heart. There's no financial interests on their side. They're not making any money. They don't have any pecuniary interests or ulterior motives whatsoever. They are, of course, extremely well educated on whole life insurance. They spent years researching it all the way to the bottom, right? They've read all the books, they've done all the studies, um, and they're just there to help you. They're just there to help you. They're not trying to make money. All of them have taken vows of poverty, so they actually don't make any money, um, as opposed to evil, greedy, selfish people like me who are just there to make money. So I just thought I'd put that out there. Whole life insurance, evil, infinite banking, scam. Just so you know, next time, don't be taken advantage of by these evil life insurance agents who try to protect widows and orphans. We don't want any of that. We want to instead exploit widows and orphans via retirement accounts, mutual funds, stuff like that, which of course are wonderful, wonderful, wonderful things.